What if I told you that the price of one Starbucks coffee could be the difference between retiring broke and retiring with $4 million? I'm serious, because right now the average American is getting played. They work 40 hours a week and for 40 years. And you know what they retire with? $333,940. That's it. That's what a lifetime of playing it safe in quotes can get you. And that's based on a survey of consumer finances as reported by NerdWallet. Yes, you heard it right. The average retirement savings for an average American family is $333,940. But here's what nobody's telling you. There are people, regular people just like you, who figured out a secret. They discovered that $10 a day, just $10 could make them wealthier than 99% of Americans. And today I'm going to show you exactly how they did it. Look, I get it. You've heard promises before. Get-rich-quick schemes, crypto moonshots, day trading miracles, and they all let you down. This is different. This isn't gambling, this isn't speculation, this is math, cold, hard, beautiful math that has created more millionaires than any other strategy in history. I'm talking about 2 ETFs. That's it, just 2. Are you ready to see how this works? Welcome to Trailblazers Mindset, where wealth builders come to get inspired. Let's dive in. First, let me introduce you to your new best friend, SCHD, the Schwab US Dividend Equity ETF. This thing is a game changer. It's like owning a piece of every major American company that prints money, and they're going to pay you just for holding their stock. Listen to these numbers. 1. Nearly 4% dividend yield right now. 2. Dividends have grown 11.3% every year. 3. Stock price grows 7% annually on average. And 4. It costs you practically nothing to own. What's inside this money machine? Companies like Coca-Cola, Verizon, Home Depot, Microsoft. These aren't some fly-by-night startups. These are the companies that built America. They've been paying dividends for decades. If you are wondering what's inside this money machine, well, check this out. When the economy crashes, people still drink Coke. When times get tough, people still need phone service. When markets panic, people still shop at Home Depot. That's the beauty of this strategy. It's recession-proof. Now here's where it gets insane. You start with just $10 a day. That's $3,650 in year 1. By year 5, you've got $20,000 working for you. By year 10, it's $65,000. But here's where compound interest becomes your best friend. By year 20, you've got $320,000. By year 30, $1.79 million, just by staying committed to $10 per day investment. And here's another information that blew my mind when I first calculated this. Out of that $1.79 million, only $656,000 came from the stock prices going up. The remaining $1.27 million came from reinvesting dividends. That means 70% of your wealth, 70%, comes from companies paying you to own their stock. No wonder Warren Buffett said, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. But we're not done yet, because SCHD is just half the story. Before we continue, if you find value in this video, please hit the subscribe button to join our growing community. We appreciate your support. Thank you. Now let me introduce you to the Wealth Rocket, the Invesco QQQ ETF. This is like owning a piece of the future. We're talking about Microsoft, Nvidia, Apple, Amazon, Meta, Tesla, Google. These aren't just companies. These are the empires that run our digital world. Check out these numbers and tell me they don't get your heart racing. 15% return in the last year, 122% return over 5 years, 381% return over 10 years. That's not a typo. That's the reality of the type of returns that this ETF has been providing consistently. Now let's dive into the calculations using the same strategy, just $10 a day. Year 1, $3,650. Year 10, $82,000. Year 20, $478,000. Now check this out. Year 30, $2.3 million. Now, are you ready for this? Because when you combine both strategies, SCHD 1.79 million and QQQ 2.36 million, the result is 4.15 million in pure wealth. Do you understand what this means? While your coworkers are stressing about their measly 401k balances, wondering if they'll ever be able to retire, and living paycheck to paycheck even in their golden years, you will be sitting on over $4 million with $17,000 hitting your account every month like clockwork. Now you might be thinking, this sounds too good to be true. Let me tell you why this works when everything else fails. First, simplicity. No complex trading, no trying to time the market, no following hot tips. Just 2 ETFs and the discipline to stay consistent. Second, proven track record. These aren't untested strategies. SCHD and QQQ have been crushing it for years through bull markets, bear markets, and everything in between. Third, compound interest. Einstein called it the 8th wonder of the world, and now you know why. But what if the market crashes? Great question. QQQ survived the documented 2008 recession and the 2020 crash, and SCHD survived the 2020 crash as well. In fact, crashes make you richer because you're buying more shares at cheaper prices. What if these companies fail? Each ETF owns 100 plus companies. If one fails, it gets replaced automatically. You're not betting on one company, you're betting on the entire American economy. What if I can't wait 30 years? Even 20 years gets you to millionaire status. Even 15 years beats traditional retirement planning. If you start at 35, you can retire at 65 with $4 million. That's traditional retirement age with extraordinary wealth. Even if you start at 45, you can hit 75 with $4 million. You may also be wondering, what if I'm already 55? Well, if you recall, the projected numbers for SCHD and QQQ at 20 years are 320,000 and 478,000 respectively. The sum of that shows that even at 55, you can still end up with 789,000 at 75. Listen, every morning you wake up and face the same choice. Spend $10 on something that's gone by evening, or invest $10 in your future millionaire self. That coffee, gone in 30 minutes. That lunch upgrade, forgotten by dinner. That impulse purchase, probably in a drawer somewhere. Remember that what separates the wealthy from everyone else is not intelligence. It's not luck. It's not connections. It's discipline. It's the ability to do the right thing consistently, even when it's boring. Most people want the get-rich-quick methods. They want excitement. They want to feel smart by picking individual stocks or timing the market. But wealthy people, they choose boring. They choose consistent. They choose proven. Warren Buffett, one of the wealthiest men alive, made his fortune doing precisely what I'm showing you. Simple, consistent, long-term investing in quality companies. And I love one of his quotes that states, "Opportunities come infrequently. Therefore, when it rains gold, put out the bucket, not the thimble." If you're serious about building real wealth, then consider this channel as your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth together. If you are interested in how savvy investors are turning $20 a day into $1.4 million, check out our video on that topic. The link is in the description. Please note that we are not financial advisors. This content is for informational purposes only. Click on the next video on your screen. We appreciate your support. Thank you.